Before we head in for the week, just a few notes. July 31st is coming up fast, 10 days away. That's the last day for the all-included pricing for the applied level. July 25th, again, last day for new positions in the market outlook. After that, it is only in the applied level. Ocean shipping, understanding ocean shipping is now up. It's hour and a half to 2 hours long. Plus, there are separate videos up for the 10K walkthrough for Starbulk, which is a dry shipper, and for Frontline, which is an oil tanker. And I'm currently doing the container shipper, SFL. That should be up on Monday. We'll start again with the economic data from the past week. Monday, we got New York Empire State Manufacturing Index negative 6.6. The expectation was for negative 6. The previous reading was negative 6. This adds to a list of regional indexes we received the week before, which all came in weaker than expected. However, this week, we will see on the next screen that one of the regionals came in quite strong. Heading to Canada. Canada has a Bank of Canada meeting this week. I see no reason why they wouldn't cut rates again. Have a look at some of this data. Housing starts for June, 241,000. The expectation was for 260, so we're actually getting 18 to 19,000 fewer homes started. The previous month was revised up to 265, so you can see the real drop down to 241. This supports apartment REITs. If houses aren't going to be built fast enough, you gotta keep renting. And apartment REITs held up very well last week in Canada. This was really good news supporting a rate cut. Core inflation rate month over month is in deflation, negative 0.1. This is the core. That's not headline. That's the core. That's a big deal. Core inflation month over month, negative 0.1. Look at the month before, 0.6. Look at that drop. Core inflation year over year, 1.9. The month before, 1.8. 2 months that we could see here below 2%. Inflation rate year over year, this is the headline, 2.7, down from 2.9. So headline is coming down. And we look at headline inflation rate month over month, we have the same thing, negative 0.1. The expectation was for it to drop to 0.1. From 0.6 to 0.1, went even further. Look at that big drop from 0.6 to negative 0.1. That is, you know, I mean, it's consistent with a longer term trend of inflation coming down in Canada, but month over month, those are big drops. Combined with sort of anemic economic data coming out of Canada, I see no reason why the Bank of Canada would wait. I think they go again this coming week, which would then really support Canadian utilities such as Enbridge and Canadian apartment REITs. Heading to the U.S. for retail sales. Retail sales are hard to figure out sometimes because it's a nominal measure, not a real measure. So a real measure looks at the quantity of stuff. So we can tell whether there was a greater quantity or less quantity of goods and services being moved. Here, it's a nominal measure. So let's take one category, for example, appliances. And let's say appliances in retail sales came in at negative 0.2. Is that because there was less demand for appliances? Or during that month, was there a nationwide sale on a particular category of appliances? Or are people ignoring the higher priced items and just buying more of the lower priced items, such that the quantity of appliances increased, but everyone downgraded to the lower priced quantities? Hard to tear that apart. Not really sure which one it can be. So that's why I say, is quantity down or is price down? And price can be down because of prices just dropping, or because consumers are trading down from the premium product to the mid-range and from the mid-range to the lower. Retail sales month over month for June, flat. When you consider this is a nominal measure, price times quantity, you do have indications that price is up month over month. CPI came in low, but still you did have pricing pressure We came in 0 last month, 0.3. The expectation was 0, came in right at 0. But then this gets rather interesting. Once we take out autos, we're up 0.4. And once you take out autos and gas, you're up 0.8. That is a big increase, 0.8. So something's going on in the auto category. And again, we can't figure that out. Once we take out autos, everything else was up 0.4. So autos must have been holding it down. Is that because prices have been coming down? The quantity is increased, but at much lower prices? Or are people ignoring the $100,000 vehicles and instead buying the $60,000 vehicles? And if you get enough of those over the course of a month, the category does look like it hasn't grown that much. Export prices, look at that, negative 0.5 month over month. The month before was revised down to negative 0.7. Export prices year over year up 0.7. Previous month was downgraded to up 0.5. That's below 2%. Not that this is the metric that the Fed looks at, but if you have all the different pricing indexes from everywhere below 2%, it stands to reason that the overall price index must be below 2%. Import prices month over month flat. Last month was upgraded slightly, but still negative 0.2. And import prices year over year up 1.6%. Expectation was for 1, but even up 1.6, you're still below 2. So what you're exporting, prices year over year are below 2. What you're importing, prices year over year are below 2. Canada, core inflation is below 2. So as we take each day forward, as we add more labor produces more output reduces the upward pricing pressure. I mean, I don't know that it takes much to say we shut down a whole economy, we reopened it back up. Obviously, the inflation was supply driven. And as we're adding more and more supply, we're seeing that prices are fixing themselves. We still have the same level of debt, if not higher debt. You still have the same level of government spending. You still have asset prices going up. You have all of that going on and prices coming down. That's because supply is meeting the challenge. Moving to Wednesday, industrial production and capacity utilization mixed up in there. This is odd data. This is for June. And a couple of weeks ago, we had the ISM manufacturing for June. Came in below 50, in contraction. 48.5 came in below the month before and below expectations. But industrial production, look at this. Forecast was for 0.3, came in at 0.6. Even the month before was upgraded to 0.9. Capacity utilization, 78.3, upgraded the month before. Expectation 78.4, came in at 78.8. Somewhere between usually 78 to 82% capacity utilization is usually a signal that more capacity needs to be added in the manufacturing sector. So I find it interesting. 78.8, we're just inside that 4% range. As you get closer and closer to 82, you have to utilize manufacturing facilities, 3 shifts, not just 2, but 3 shifts. You got to really push it because it's hard to get much above that. So it usually signals that you have to add more capacity at some point. Manufacturing production month over month up 0.4. The previous month upgraded to 1%. The expectation was for 0.2. This is at odds with the ISM manufacturing, and it is at odds with some of the regional, regional central bank regions. When I say regional, some of the regional manufacturing and services index that we've seen. So I just put a question mark there. I didn't look at the overlap of the sample and the sample time period with any of the other data that came out. It could be that it's a different sample over a different period in the month. Getting down to oil inventories, crude oil stocks. We get this every Wednesday. Large drawdown, down almost 5 million. And this could be, and I'll show you something a little later on, this could be because the exports out of Saudi Arabia really dropped down, and it could just be more exports out of the U.S. because this is at odds with gasoline stocks down. A build 3.3 million. The expectation was for a draw of 1.7 million, and you had a very large build in the summer months. That's why I put question marks there. Usually you have drawdowns in the summer and then they build once the cold weather starts coming back in. But you have a build here, a large drawdown in oil inventories, a large build in gas. So, you sort of have to posit potential questions. Is it because there's more EVs on the road and they're slowly starting to show up, or is there less driving going on? This is a real quantity, right? This is not a price quantity. That's a real quantity. You can count the barrels of gasoline. Going into continuing jobless claims, we're into Thursday now. 1.867 million. The expectation was for 1.86 for continuing claims, so more people on longer. And initial jobless claims, that's a big jump up, 243. Expectation was for 230. Previous month upgraded as well. Previous week upgraded as well to 223. Kind of supports a rate cut. We are seeing that inflation in the U.S. is coming down, and you are getting more evidence that the economy below the surface does appear to be slowing down. If you're going to cut rates in September, if this stuff works with a lag, why not go in July? Why wait till September? Why not go in July? So we'll look at the probabilities of a rate cut. They're well under 10%. I think the probability is higher. I wouldn't say it's 50-50, but I'd put the probability of a rate cut for July from the Fed higher. Philadelphia, 13.9, expectation 2.9. That is a big jump up. What is causing it? Philly Fed employment 15.2 from negative 2.5 up. New orders 20.7 from negative 2.2. And with all of that, look at prices paid. Went from 22.5 down to 19.8. Still more evidence that price pressure is coming down. And on Thursday, we also got the Conference Board index, leading economic indicators index. Previous upgraded, still negative, but not as negative, upgrade to negative 0.4. The forecast was for negative 0.3, came in at negative 0.2. You'll recall that I had mentioned this for quite some time over the last year and a half, that it was a recession warning and then a recession signal, and that it had never been wrong. Whenever leading indicators turn down, there's this negative 4%. Whenever it goes below that, there's always been a recession, and it has since been turning up. This period of time seems to be breaking all the conventional patterns that we used to see, breaking technical patterns. Oh, this is once this signal or this price signal or this volume signal has happened, nothing has ever happened like this before, and then suddenly, well, it just did. And we've never escaped a recession when the leading index was below the recession signal. And whenever we've had an inverted yield curve for as long as we have also never escaped a recession. Is it going to be that these two indicators will see their first black swan? Black swan being the first time it hasn't worked. I don't know. Maybe I'd be willing to let this one go, but not this one, not the inverted yield curve. Friday in Canada, even more support for a rate cut. I'd say I'm 99% sure of a rate cut from the Bank of Canada on Wednesday. Retail sales negative 0.8. The month before was downgraded to up 0.6. The expectation was for a drop. This is lower than expected. PPI month over month 0. The expectation was for 0.2. You have 0. Raw material prices month over month. Negative 1.4. The month before downgraded to negative 1.5, much lower than expectations. Retail sales ex autos, if we take autos out of them, we saw in the U.S. that here's your retail sales. Let's get rid of autos. The rest of this stuff actually increased, so autos was holding it down. Canada, it's the other way around. Take out autos and you actually get even worse. negative 1.3. And the month before downgraded to up 1.7. Expectation was for negative 0.5. So you have retail sales, which are dropping off. Our GDP has been flat to slightly negative, and prices, as measured by a bunch of different pricing indexes, are all in the territory where we would say if we saw those price increases, they would not result in a rate increase. Hence, may as well bring rates back down. I think they support a rate cut. I would bet for a rate cut on Wednesday. What is my bet going to be? I think that the Canadian dollar will continue to weaken against the U.S., but it's already 137.3. I'm not going to touch that. But I haven't changed any of my positions on apartment REITs or my short puts on Enbridge because I do think that a rate cut will be very supportive of those prices on Wednesday. All right, rates and yields, money market rates, all very well behaved. The 1 year pricing in nothing more than it did the week before. Capital market yields all up, single digits. And I think this it certainly wasn't the sell-off in big tech that usually supports a rush to, or not a rush, but a move to safety, which would support Treasury prices. This is probably the growing realization that a Trump presidency will add to the debt. But a Biden presidency would have added to the debt. You're going to add to the debt no matter what. I think what was missed, or maybe it wasn't missed, was at the end of the RNC talk that he gave, it was the first time I heard anybody say, we're going to lower the debt. We are going to lower now. I mean, he says it, but you know what? It's not, there's no action plan. And it's like maybe he just says it, but all his other policies are going to work against it anyways. But at least it's the first time I heard somebody say we're going to lower the debt. Still, I think this is a little bit of a Trump trade going on in here. The realization that if he extends the tax cuts, you are basically guaranteeing that you're going to have deficits throughout his whole term and increasing debt. Remember now, it's $1 trillion every 100 days. However, you can, and I think it's the interest expense is almost $1 trillion for the year. So I think you can get the interest expense down slowly. It's a slow-moving average interest expense, but you can get it down if you cut rates, which we know he wants, and he wants a weaker U.S. dollar. We know he wants that, and so does J.D. Vance, is a proponent of a weaker U.S. dollar. Curve inversion still going on, but sort of creeping away slowly, negative 24. On the money market to capital market inversion, negative 118. Canada is negative 105.6 on that one, because the belief is that Canada is on a rate cutting cycle now. It's firmly on its way. Balance sheet runoff, 12.18 billion from the SOMA, down to 6.645 trillion in securities. Balance sheet down another 15 billion, so the net runoff from the balance sheet outside of the securities was another 3.6 billion. Still, when you think about it, that's still a big number. That's still money that has to be withdrawn from the system. I don't think they're going to be successful in getting that down to the levels that they want. I think a crisis will occur given the sheer level of debt that the U.S. has. I don't know that the Fed has any other choice than to stop runoff and lower rates, maybe even start buying, because who else would buy if you start going from 34 trillion to 36 to 38 to 40 trillion? Money market funds increased. The decrease is reversed, 9.6 billion. Look at that, 6.15 trillion. Retail up 7.36 billion. Institutions 2.25 billion. All categories increased. We're now 10 days away from FOMC. 95.3% market probability of nothing happening, up from 93.3. No belief in July. I don't share these probabilities. I'd be more 60-40, to be honest. Bank of Canada rate decision in 3 days. Here I'm about 99% certain, or at least if it were me making the decision, it would be an easy decision to make. If I were making the decision for the Fed, it would be, well, you know, we don't want to risk inflation coming back up, but at the same time, we know it works with a lag. You know, I can make an argument both ways. That's why I'd be more 60-40 in the US, but I'd be almost 100% if it were me that I would move. US CAD right now sitting at 137.30. It was under 135 just for a bit last week. 137.30, starting to price in some of this pending rate cut. I still think 1.39 is where I would want to step in. The market may believe that the interest rate differential between Canada and the US is just going to get wider because BOC will cut while the Fed will stay on hold. I don't think that is the case. So if I see CAD at 139, I would certainly buy the CAD and short the US at this point in time, which is really just selling the pair. So you'd put in a sell order for this pair at 1.3900. Big number coming up in 4 days. Second quarter US GDP, the first look at it. We only get GDP. We don't get GNI, the gross national income, until we get the second look at GDP, which we'll get at the end of August. We also get durable goods that day. I say plus durable goods, not to downplay it, but we do get, it's a big report. We get durable goods that day, but this will get the attention, is second quarter US GDP. And then Friday, US PCE for June in 5 days. Treasury issuance this week is on the 2s, the 5s, and the 7-year tenors. And Wednesday, only one speaker, Michelle Bowman. Going out to December 18th, not much change. 0 or only one rate cut. 6.2% is now 6.4%. Most of the weight is on 2 to 3 cuts. We're at what, 91.5%, and split almost evenly between 2 and 3 rate cuts by December 18th. I'm still on the 3 camp. Effective federal funds rate 5.33. Reverse repo was 406 billion, now down to 379 billion, a drop of 26. Lowest is still 327 from April 15th. We're at 379 now. TGA increased 23 billion to 745. Their target is 750, so I expect they'll fluctuate in and around that 750. Reserves 3.32, down 18 billion. So the combination of reverse repo and reserves minus ample, 1.2 trillion at 40 billion a month. That is 30 months. Oh, look at this. We're getting close to actually printing a 2 on that and getting down into less than 2.5 years. Real yields, almost nothing going on there, and inflation expectations, which seems odd to me that it would creep up, but there it is. I think that there's not much meaning that we can interpret in there. Basis points here and there each week. Looking at the Fed funds futures curve, Q3, still sitting at 25.5 basis points. One rate cut somewhere in Q3, and I think the market is on September for that. Q4, 38.5. That is about 1.5 priced in there. So we're at 64 versus 25 on the last summary of economic projections. 2.5 versus 1. Q1, another 1.5 basis points there, 35.5. So over the next 3 quarters, 4 cuts, 100 basis points. I think it's going to be more than that. TLT down 1.09%. SPX down almost 2%. We get some implied volatility back, 49th percentile on the 13-week versus 13. I sold the August 93 puts at $1.39 on Friday, and TLT was sitting just below the 93 mark. I was looking at the 90s, 91s. I thought, well, why? I mean, I even if it got down to 90, 91, it's not going to stay there for long before it comes back up. Every day we are inching closer to the reality of a rate cut. Even if you don't get it in July, then all bets are on for September, and I think you will get rate cuts creeping in. I think we're supported here on this one. When I look at the change in capital market yields week over week on a Trump trade where, the discussion was that there was a lot of discussion, by the way, if you noticed on Bloomberg, a lot of discussion about the level of the debt. You're getting more and more voices saying, hey, somebody's got to do something about this. And a lot more voices recognizing that it is going to be a problem. No one's saying it's a problem right now, but they're saying we are driving pedal to the metal towards a wall, and nobody is even thinking about hitting the brakes. So that you have that slow realization, that conversation, that narrative in the background, and capital market yields all single digits, up all single digits. I think they're well supported there. So I had no problem with an at the money put. So I sold 93 puts at $1.39 for August. If they're assigned, I'll let them be assigned. I have no problem with that. I don't think they will be assigned though, but that's why I sold them. 30-year fixed rate mortgage, 6.77, dropped 12 basis points over the week. The 10-year over the same period of time had no movement. So the spread has decreased 12 basis points, negative 257. Let's look at some of the housing stocks. And man, did DR Horton knock it out of the park. Big price jump last week. This is all month to date returns here. We're July 21st as I do this. So this is to July 19th, Friday, July 19th, because that was the market closing. July 1st to the 19th, DHI up 23.35%, Lennar 14%, Pulte 13%. Their earnings are on July 23rd. KB Homes 14%, Toll Brothers 14%, Hovnanian just this big volatile, I shouldn't say big in volatility, small size, 27, up 27%. XHB up 10, almost 11%. ITB 13%. These are ETFs that track a portfolio of companies. Look at those numbers. If I just put those percents up, I said year to date here percents, you'd think, well, it must be tech, it must be healthcare, it must be semiconductors. Nope, it's home builders. Wow. Agency up 7.13% since the beginning of the month, and that is going to respond. This will respond to two things, all right? This will respond to rate cuts, and this will respond to a shrinking spread. But instead of the spread being from the 30-year to the 10-year, the spread will be from the MBS to the 10-year, and the MBS to the 10-year is elevated. Our closest proxy to it is the 30-year fixed rate mortgage to the 10-year. 7.13, Annaly up 5.3%, ABR down 8.64, but ABR has been holding its book value per share, which we think is somewhere in the 13 to 13.10 range. And it held its strength there. Dipped below that for a bit, but quickly came back up and has been hanging out at the low 13s. I think this is where we sit until we hear from Arbor. Usually they're the first Friday of the second month. So earnings is July, the second month is August. They're usually the first Friday of the second month in the morning, in the AM. I will be on the call for that one. And as I said before, there was no way that they were going to avoid being looked at, being that the space is being looked at, and being that it wasn't looked at in 2007, 2008, when everything illegal was going on. There was no way they were going to avoid it, no matter how golden they are, no matter what kind of people are standing around saying, oh, not these guys, not these guys. It's like, look, we got no choice. So I still think that's the story behind that one. I still think they're good, they're golden in that sense, and I think that this will eventually go away. The call and the quarter, I think, are going to be a must listen to if you're an ABR shareholder. IYR, this is an index of REITs in the U.S., up 5.89, PLD up 10.19%, and DLR, they have earnings July 25th, 2.05%. Digital Realty. So if you're looking for digital centers, there it is. Not the healthiest, but its top line revenues are just killing. Mortgage apps last week up 3.9%. Building permits for June up 3.4% month over month. Housing starts for June up 3% month over month. This week on Tuesday, we'll get existing home sales for June, and on Wednesday, we get new home sales for June. Looking at OAS, look at this again. Investment grade, nothing going on there. Just tumbleweeds and blowing wind. And with all of the concern in the equity market last week, you would think that high yield would take this advantage to widen its already very tight spreads, but it said, no, we're going to run into the fire even more. That you have even tighter spreads, 9 basis points on the class as a whole. 22 basis points on triple C. This is the riskiest of the risky category, and contraction of 22 basis points, double B. Contraction of 9 basis points. We want that even more. Well, you know, I think if you're in a high yield company, in the equity of a high yield company, and you are concerned, but you want to keep exposure to the company, you would gravitate higher in the capital structure. If you sold your equity, you'd say, well, what return am I going to get? If you're going to be exposed to the company, may as well be higher in the capital structure, may as well jump up to the high yield. Maybe that could be it. Okay, let's talk about new positions. As I've already mentioned, TLT $93 put for August at 139. Two reasons here for the trade, and then I'll go into reasons why TLT, but two reasons for the at the money and why I did do TLT. There is some implied volatility that has returned, which adds to the premium, which makes it worth it. And I went to at the money because I'm getting more and more comfortable that as we get closer and closer to rate cuts, TLT is supported at higher and higher prices. You do have rate cuts coming. I seem to think July 31st should be a go meeting, but we'll see about that. If not a go meeting, at least in the press conference, I think there'll be a clear signal that the next meeting is a live meeting. And you do have slowing economic indicators. So you have pricing pressure coming down, you have slowing economic indicators, you have the conditions for a rate cut, and Trump wants rate cuts. Now that's just simple. He wants rate cuts. He has a way of just bullying people into getting what he wants. I don't know that we have to think about how he's going to get it done. He just wants it done. If he's got to threaten their families, he'll threaten their families. All this supports bond prices, so I'm comfortable with the TLT 93 put. This is a French aluminum manufacturer. They make aluminum products. They report on July 23rd. 43 cents per share is the expectation. August 18 puts at 59 cents. Not much of a following of the analysts that follow. Of the 5, there are 5 solid buy ratings, either strong buy or buy, no holds, no sells. On semi, 65 put at 224 for September, sold that one. It is coming down with the rest of the sell-off. If you look at the SOXX, that has really been coming down. I might be interested in selling puts on the SOXX. I just think that we could probably see a little bit more downside on that one. Again, the Trump. I'm not gonna call it the Trump trade anymore. We'll call it the Trump Vance trade. Is anyone curious as to his picks of VPs? NCE. I think he had a whole bunch of Trump Pence signs made up and decide, I don't want Pence, but I don't want to spend money on new signs. I know what we'll do. We'll just do a sticker that has VA on it, and we'll cover up the PE, and we'll just put that in front, Trump Vance instead of Trump Pence. Maybe he just likes the rhyming, Vance Pence. I don't know. I think it's overdone. September 65 put 224. It's a nice premium on semis in the low 70s. So you get still $6 of downside before you get to the 65, and then another 224 of protection because that's the premium before you even start losing. Lamb Weston, August 72.50 puts at $1.50. July 24th earnings $1.26 is the expectation. They fell last time. They had an ERP implementation issue. which caused them some sales and cost them some money, and took a big hit. Whenever you have a stock that has look at any stock, and on earnings it does this. All the ambulance chasing law firms show up. Hey, let's sue them, let's sue them, let's sue them. They threaten to sue first, and then they see if there's any reason to sue after. So it's let's sue them, contact our office, get on board. Can we get enough people? They all do that. All the ambulance chasing law firms show up. And if you look at any company that has that pattern and look at the law firms that show up, it's the same group of ambulance chasing names. I mean, you really have to be, I think, a loser lawyer. And, well, lawyers don't have the best personality to begin with. But you got to be a really loser lawyer to work for one of these firms, because that's all you do, is you go chasing after companies that have a big price drop and try to see if you can get enough people to pay you money to do a class action lawsuit. It's scumbag law. But that's what you get. So for anyone who says, yeah, but there's a lot of lawsuits, it's all the same scumbag law firms that chase every company that drops in price. You never hear anything of it. If you look at any of these companies with these scumbag law firms chasing them, and you look at legal issues, they're never listed among the legal issues, because this rarely ever gets anywhere. What you're seeing is Pomerantz law firm is collecting names of people who feel they lost money. Contact us. Let's see if we can get a class action. And it never goes anywhere. So anybody who is afraid of all those law firms, those are the usual ambulance chasers. Barclays just recently overweight, price target of 96. Now, mind you, that is down from 105, but still overweight with a 96 price target. Their dividend is $1.44 on Lamb Weston, so you do get some yield, 1.86. It's not great, but you do get some yield on this. Citigroup has them as a buy, price target of 104. This is an event, not a trend. So you can trade events, and you invest in trends. This is not a trend, so it's not as if we're going to see more of this. Copper. Taking this opportunity to make a nice bigger bet on copper. I've done it in three ways. I've done it with copper directly. I did it with my favorite miner, FCX, and with the with an ETF. Freeport, July 23rd. They have earnings. 40 cents is the expectation. But over the quarter, you had elevated gold prices and copper prices that pretty much hung in around the 450 mark. So I think they're going to do quite well. So for HG, for the August contract, last day, the 27th, the option expires on the 27th. I sold the 405 put for 0.047 or 4.7 cents. And if you think, well, 4 cents isn't a lot, the contract is for 25,000 pounds, and it's 4.7 cents per pound. So each contract is 1175, 1,175. And if you are in, well, I'm doing this based on a Canadian base. If we convert it into Canadian dollars and look at the margin, it's almost 10% premium to margin at 10%. Copper sitting at 425. This is 405, 20 cents down, and you're getting 10% premium to invested capital. That to me, that sounds nice to August 27th. Freeport, August, I just went on a selling spree here. I sold the 47 puts for August. All of these are August puts. Sold the 47s for $1.30. It kept dropping. Sold the 46 for $1.43. Kept dropping. Went to the 45s for $1.56. Kept dropping. Went to the 44s for $1.31. If it keeps dropping, I'll do a 43, 42, 41. This is rebuilding a significant position in Freeport. They're sitting at 45.91, which is just below the 46 strike over here. 45.91. COMEX, August 43 put, 84 cents. I am still extremely bullish on copper. EVs are not slowing down. China's pumping out literally millions of them. So they require much more copper than internal combustion. And if we believe that the world is going to be more digital going forward, if you believe in Elon Musk that there'll be robots in all these houses. And if you believe in an AI future, that the AI build out is years, you must believe in copper. You must be absolutely bullish on copper, because anytime you need to run an electron from point A to point B, you need copper. So there is enough copper in the world right now. There is enough copper, but there will not be enough copper. So I was surprised with the run up in copper to over $5 a pound. I thought that was overdone given the inventories we had out there. But I think that copper prices are well supported in the $4 to $4.25 range. $4.50 was a nice premium. I think it's well supported in this range. You have to believe in copper. I think if I had to pick three things before I went into a 5-year coma, they would be pretty much in order. Canadian apartment REITs, because that problem's not going to be solved for quite some time, would be Canadian apartment REITs, it would be copper, and it would be utilities. Those are the three big things. Put all my money in there. I'll come back in 5 years and I'll be very happy. Unhappy with any withholdings or tax bills, but very happy overall. Goodyear Tire, August $12 puts, 59 cents. Sold those. GM dropping. They peaked over $50, over 50, and then pulled back. 45 puts at 51 cents. I will continue to sell puts on GM on weakness. July 23rd, they have earnings. There's a lot going on this week, both Freeport and GM on that day. And for you Teslites out there, Tesla is reporting that day as well. July 23rd, $2.68 expected, $2.68 for the quarter. Incredible. Pending. This is one that I'm getting very interested in, is the Mexican peso. Gave up on it for a while. It had in the 20s and 19s. I thought it had some upside, and it did. Then we had a pullback, and I said I'd be interested in it from the 19 to the 1950 range. Moving it up to 18. I saw it right around the 1810 mark on Friday. I put a sell order in for the pair. That would be sell the US, buy the peso for 1810. Did not get filled up to 5 o'clock. I was hoping I'd get filled, but I didn't. So I'm going to do it again next week. Look at this. This is a little headline that came into my inbox. Global liners flock to Mexico. South Korean flagship carrier HMM became the latest liner this week to announce a new service linking China with emerging manufacturing powerhouse Mexico. There have been a rash of similar China-Mexico loops announced in recent months, changing the makeup of the Trans-Pacific container trades. Last week, Ocean Network Express detailed a new similar shuttle. This trade is not just, well, we think there's going to be some nearshoring to Mexico. It's actually happening. More liners showing up here. I'm all on board the Mexican train on that one. General Mills, they did not have a good quarter, but they're not going anywhere. So at some point they're incredible value. So they're under 65. They had a good day last week. They were up quite strong, and then they've been giving all that back. I would be interested in either buying General Mills on weakness, or more likely selling at the money puts, 62.50s on General Mills on weakness. So there it is. There's what I've been doing. I'm very interested in copper. Copper is a significant play for me, and duration. I'm big on duration on this one. Lamb Weston and General Mills are in consumer staples. And Goodyear Tire, GM, I'm good on this. Goodyear Tire has gotten an upgrade. I forgot to mention that. They did get an upgrade, and they are selling one of their units. So all of that bodes well for Goodyear. Let's have a look at U.S. oil. We had a big drawdown in inventories, in oil inventories last week, and you also had a big drop in price. If we look at the far end of the chart, if I can get color to print on this, There, no, still not. Why are we not getting anything here? There we are. I knew I can get that to work. You can see on the very right side of the chart dropping down. Seems to be in a range of low of $70. Doesn't really want to see much elevation above 83. What was Trump's position on domestic oil? Drill, baby, drill. Said that at the convention. I think that's just campaign rhetoric. I think he's missing the point. U.S. production is already at 13.3 million barrels per day, the highest it's ever been. So drill, baby, drill. They have been drill, baby, drilling. I mean, they have. This is for March 11, 2024. United States produces more crude oil than any other country ever. It's not as if it's a record for them. It's more than any other country ever. So this pink line here that I drew is U.S. shale oil production, or I shouldn't say shale oil, is all U.S. oil production. Going back to 2013, Russia was the leader, Saudi Arabia, then the U.S. Coming to 2023, 10 years later, U.S. is the clear leader. There is Russia, and there is Saudi Arabia. And you can see the growth over time. So I don't think the Trump trade here is going to have any effect on the price of oil. It's not as if, oh, that's really going to drive oil prices down with drill, baby, drill. There'll be all this inventory. There already is 13.3 million barrels per day. However, look what's going on the other side of the world here in Saudi Arabia. VLCC. VLCC is a very large crude carrier. These are the big crude tankers that bring oil from from an oil field to a refinery in another country. VLCC rates under pressure as Saudi Arabia slashes exports. This is a headline from July 18th. New data from Vortexa shows VLCC utilization for OPEC Plus, excluding Iran and Venezuela. Utilization fell sharply during June and reached a record low earlier this month as exports from the group, especially Saudi Arabia, fell sharply. Lack of sizable alternative routes for VLCC flows, that is outside OPEC Plus, mostly Middle East to Asia, and then it just goes on to say more. We don't need to know more. Big drop. Fell sharply during June, record low earlier this month. So it's these cuts over here that are supporting U.S. oil growth. So why are oil prices held up between the 70 and 83 mark, given that U.S. oil production is the highest it's ever been and the highest for any country ever? Is because OPEC Plus is cutting back, which is supporting the price. So I do expect West Texas Intermediate, CL, to continue to trade between these two extremes, 70 and 83. And every time oil pulls back, Oxy pulls back. Oxy gives me the opportunity to sell $60 and $57.50 puts. I will continue to do that. When he said drill, baby, drill, I thought, does that challenge my Oxy trade? Am I going to be looking for something else to do now? But in looking at it, it's like, if we're already pedal to the metal in oil production in the U.S., what do those words mean? Those words mean it's just campaign rhetoric, get me some votes. But when he sits down and says, okay, let's drill, and he looks at the charts and somebody says, but we're at record levels. No country's ever been here. He'll then be able to say, no one's ever seen anything like this. Look at what we're doing. We have the most oil production ever. Nobody thought it was possible, but I did it. He already has a victory that he can claim, right? So, end result. I'm not that willing to play CL or play oil, but I will continually, I think with comfort, sell puts on Oxy on any weakness. So if we see oil drop down and I see an opportunity for Oxy 60 or even 57.50 puts, I will go in. And when I go into these things, I go in 50, 100 at a time. Okay, SPY, July 16th, this past week on Tuesday, hit another all-time high, 564.40, before giving back 3 days straight. The closing on Friday was down 2.73% below the 564 not quite 5%, halfway to 5. I don't think we've really over time gotten much more than 3%, other than this period of time here, much more than 3% pullbacks before even off all-time highs, 3% before money came back in. I don't know that we make it all the way to the 50-day moving average. It's another 1.68% down. That would be kind of close to the 5% pullback. It would be a technical signal hitting the 50-day moving average. It would be healthy. I think if we think we can make another leg higher than 564.40, it would be sort of a healthy retracement to at least hit the 50-day. The 200-day moving average is 493. It's another 10% down from here, so that would be a combined almost 13% correction. The 10% correction from the all-time high would be 507.96. Hard to see how we get there, given the willingness of the market over the past how many quarters to just keep pushing higher. So 50-day, yeah, I'd be 50-50 on that one. Getting to the 200-day moving average, I'm almost 0% on that one. 10% correction, I'd say that's probably where I am there. 10% probability of a 10% correction, given just the psychology of where the market is. Forward 4-quarter operating earnings, 260 from LSEG, 258 from SPGlobal. Closing SPX 5505, which gives us a 21.22 times forward multiple. Surprise factor of 5%, down from 8%. Last week was 2161. So operating next 12 months, a multiple based on operating earnings 21.2, based on forecasted EPS 23.4. Our trailing 12 months on operating earnings 25.5. On EPS almost 29. Implied volatility coming back 13-week at 87%. I would be interested in selling a put. I'm going to see what the price action is. And for puts on ES, you can actually trade them outside regular hours. So I should be able to trade them on Globex. Let's see what the market action is going into this, because it was a rather weak 3 days. Last week to end the week. Maybe it spills over into Monday, and if so, I think I would be willing, because we do have implied volatility here, I think I would be willing to sell a put at the 50-day moving average. I still have my short position on ES, which is negative, but it has allowed me to extend long positions that I otherwise wouldn't have done. So the way I see it is it gives me license to be longer beta than I normally would if I do have a short beta to offset it. If we retrace back to the 50-day moving average, given the higher volatility, and I sell a put, that would really close the gap between where my short ES was and where the value of this put, where this would happen to be. So if we stay above the 50-day moving average, it at least raises my average price to the 50-day moving average. I'm comfortable with that. Coming up for earnings this week, I think we're getting some kind of pickup from people listening and reporting back to these companies saying, hey, somebody's trash talking you. LSEG says 134 companies. SectorSpider.com says 135, but they list both shares of Alphabet, so it's on there twice. So they're really, in terms of companies, they're 134. Cue the band. Look at that. But SPGlobal. This is Howard Silverblatt. Howard, if you're listening, you need to raise your game, man. You need to raise your game. LSEG and Sector Spider seem to be closer together more often than not, but you are out there. So doesn't look good. Come on. Let's use sectorspider.com to have a look at who is reporting this week. Okay, Monday. Big one here, at least for me. Verizon on Monday. I don't have a position in Verizon, but I am highly interested in AT&T. Verizon is their closest competitor. There's only really two big networks in the U.S. That's AT&T and Verizon. So Verizon reports on Monday. Verizon, T-Mobile, and AT&T report in the same week every quarter. and usually sequentially day after day. Nucor, a steel company. What I've done was I've just clicked on sector to group them all into the same sector, so we see all the companies that are in a particular sector. Doesn't really show up because here we only have 5 companies. Let's go to Tuesday. XLB, Freeport is in there. XLC, there is Google, a Comcast cable company. In XLF, not much excitement. Capital One and Visa, they'll be interesting to see. In XLI, UPS, XLK, Texas Instrument, biggest analog chip maker out there, Texas Instrument. We have in Staples, Kimberly-Clark and Coca-Cola. Staples haven't been doing very well. And Tesla, XLY, look what you have down here. Home builders, NVR and Pulte. You have automakers, Tesla and General Motors. Let's have a look at Wednesday. Let me say something about Tesla here. You can make an argument. 61 cents is their expected earnings. That is going to be in their adjusted earnings and not their as reported earnings. They had a 14% headcount reduction over the last quarter. Well, that's not free to do. You have severance packages that you have to pay. You can't just say you're gone and you owe these people nothing, especially if you got rid of people that have been there 2 years, 3 years, 4 years, 6 years. You got to pay to get rid of them. So there'll be a one-time charge. So the as reported EPS isn't going to be pretty. But the adjusted takes that all out. And just would have earnings with, well, our head count is 14% less. So their operating expenses are going to be on that category 14% lower. Well, I shouldn't say 14% lower. You can't really say that. If you get rid of 14% of your staff, it doesn't mean that your wage costs drop 14%. They could drop only 9% if the people you got rid of were the lowest paid people in the place. But if they were some of the highest paid people in the place, you get rid of 14%, you could actually have a drop in your expenses of up to 20%, maybe even 25%. It depends. But if they were a fair mix across the distribution, then 14 and 14 is not unrealistic. But, I mean, we don't know. If we look at registration data, it has not been good for Tesla. However, if you look at their deliveries, they did deliver more cars than the expectation. It is a drop year over year, and we don't know what kind of incentive pricing they use to move those cars, so it's hard to tell what their margins are going to be, but you can construct a scenario where because of the layoffs, the adjusted numbers will get the attention. The adjusted numbers may make it. So if you are playing Tesla, it's sort of one of those. Here's the thing now. I don't even know if the shareholder even gives a crap about earnings. I don't even know if they care because it's about cars. And the future is about robo-taxis and robots. They're not a car company anymore, even though 95% of the revenue is cars. We are told to ignore the fact that they're a car company. I wonder if they would be interested in putting a $40 billion valuation on the car company on 95% of the revenues, put a $40 billion valuation, and then for the other 5% of the company, that's the $800 billion. I wonder if they would feel comfortable doing it that way. I'm not sure they would. However, given the, I'd say, willingness of the Tesla shareholder to overlook pretty much everything, and the focus will be on the adjusted number, Tesla just might pull it off. They just might pull it off. If you don't look too hard or ask too many questions and just keep believing, everybody get their frescas out for that one, but I will be on that conference call. Wednesday, what do we have here? XLB, Newmont. There is that gold miner who's done very, very well quarter over quarter and produces a lot of copper. AT&T, there we are. XLC going into financials. Not much down here to look at. XLI. Anything interesting that I follow, at least? Maybe you might say, hey, that stuff is all interesting, but it's not stuff I follow. XLK. ServiceNow, that's tied very closely to the AI trade. Huge multiple on that one as well. Qualcomm, that's a big one as far as staying in the tech story. Where are we? IBM, there's another one. Lamb Weston, I have puts on this one. That's in staples. Invitation Homes, another home builder. Next Era for utilities, the largest utility in the U.S. And they share Florida with Duke Energy. They're half of Florida. Duke Energy is the other half of Florida. Heading down to XLY, there is Ford Motor Company. If I had to bet between GM and Ford, hands down GM. It would be hands down GM. Ford had a good run from, I think, under $11 to a little over $14 now. I just don't see, and I have not seen in the past, Ford's ability to maintain any momentum to the upside. I don't think that changes. Going into Thursday, let's see, energy, not much in energy here. Financials, anything interesting to look at here? Not very much. In industrials, Southwest Airlines, let's see how they do. American Airlines, so you got a couple reporting. Union Pacific, you got a railroad in there. For staples, only Keurig, Dr. Pepper. Digital Realty Trust, if you're looking for another piece of the puzzle of the AI story and the strength of that, they have digital you know, when you get older, I've said this a couple of times, your brain withholds words, holds them hostage just to embarrass you, and then when you don't need them, your brain says, here you go. Data centers, there we go, thank you. What else have we got that's interesting? Not much that I follow in that category. And then for Friday, anything interesting in here? Not much that I follow, but maybe stuff that you follow. Well, there we go. That's the earnings for the week.